Hello, my name is Sadife. I am a Senior Strategy Associate here at Nomad Capitalist, and today we are going to be discussing some tax-friendly countries in emerging Europe. Starting the list off with Georgia. Now, Georgia has a territorial tax system, and in accordance with the tax code in Georgia, only income that is derived from Georgia is taxable, meaning that any income coming from outside of Georgia is not subject to tax. In order for you to become a tax resident of Georgia, you have a couple of routes. One, you can go for your normal route by spending more than 6 months there, or you can opt to become a tax resident of Georgia by essentially spending little to sometimes even no time in Georgia, but you need to make investments. In order to qualify for the high net worth individual and become a tax resident of Georgia that way, what you can do is either show proof that you have a net worth of 3 million Georgian lari, which amounts to about 1.2 million US dollars, or you can show that you have had income of about 200,000 Georgian lari in the previous 3 years. This amounts to about 80,500 US dollars. On top of that, what you will need to do is also invest in Georgia. Now, this is a recent addition. The investment needs to be 500,000 US dollars, and it can be like a bank account deposit or maybe even real estate investments. This is the first requirement. On top of that, you either need to be a resident of Georgia, so hold a residency card, which can be done in many ways, including real estate purchase, or you need to show proof that you have about 9,000 US dollars of annual income that is Georgian sourced. The Georgian sourced income can be income from a rental property. It can be maybe you made a deposit in a Georgian bank account and you are receiving interest through that, or you can even set up a company in Georgia and pay yourself a salary. The next country that I'm going to be talking about is Bulgaria. Now, in Bulgaria, capital gains, personal income, corporate income, as well as interest and royalties are all taxed at 10%. Although capital gains derived from the sale of shares from the Bulgarian stock market or a market regulated in a state of a EU or EEA usually is not taxable. Tax on dividends is usually 5%, but dividends paid to legal entities that are tax residents in an EU or EEA member state are not taxable. You can become a tax resident of Bulgaria by spending more than 6 months there and obviously showing proof that Bulgaria is the center of your vital interest. Romania is also a nice choice if you want to set up a micro enterprise. In Romania, if you have a company that is considered a micro enterprise and you have a gross income of less than €500,000 on an annual basis, you can be taxed very favorably. Now, if you have no full-time employees, the tax will be 3%, and if you have at least one full-time employee, you can be taxed at 1%. Obviously, in order to qualify, the company's social capital cannot be owned by the state or any social administrative unit. An important thing to note here is that the tax on dividends is going to be 5%. The company will benefit from the favorable tax rate if they have at least one full-time employee. But there is another opportunity. If you have 2 or more part-time employees, but their total working hours amount to the working hours of one full-time employee, that can also be an option. If Romania is not for you, maybe you can opt for Armenia, which is also very tax-friendly for micro-entrepreneurs. In Armenia, businesses whose annual turnover does not exceed 24 million Armenian dram, which amounts to about 50,000 US dollars, they can be considered a micro enterprise and essentially be taxed very favorably. Although businesses are exempt from almost all taxes, they still will need to pay import tax and also tax for their employees, which is about 5,000 Armenian drams. This means that businesses do not pay any corporate income tax, VAT, and turnover tax as well. If you are a sole proprietor or a commercial organization, you may be able to qualify for the micro enterprise in Armenia. If you are a sole proprietor engaged in wholesale, you cannot qualify. Also, banks, consulting, legal, and similar firms cannot qualify either. The next country is Serbia. Now, if you are a regular employee, Serbia might not be the most tax-friendly because on top of personal income tax, which is 10%, you will also have like health care insurance and also social taxes that you would need to pay. But the good thing about the Serbian tax system is that it doesn't have any CFC rules, meaning that the company that is offshore will not be taxed based on ownership. It does have PE or permanent establishment rules, so you should be careful of that. The corporate tax in Serbia and dividends are both taxed at 15%. When it comes to payroll taxes, social contributions must be withheld during the payroll process. Again, this includes pension, health insurance, and this is usually payable from both like the employee and employer. So the employee must withhold 30% of their salary while the employer pays 17.9%. So when it comes to payroll, if you're an actual employee in Serbia, it's not really that tax friendly. Montenegro can also be considered tax-friendly, although it is not as tax-friendly as it used to be. Right now, they are making some recent changes where the tax rate is no longer 9%. Although it used to be 9%, now corporate income tax, dividends, and royalties are all taxed at 15%. There is also a new tax imposed on inheritance, which is right now at 3%. Although gift is actually tax-free, so you wouldn't really be taxed on that. But even though with the recent changes of the tax coming up to 15% from 9%, Montenegro can still be considered actually a very tax-favorable country in comparison to some others. So if you opt to go to Montenegro and become a tax resident there, you can do that by spending more than 183 days in Montenegro. So you actually need to live there full time in order to become a tax resident. Also, keep in mind that you will actually be taxed on your worldwide income. So these were a few countries that could be quite tax favorable that you can consider when you're thinking about your move to Europe. If you want to learn more about these countries, you can always watch our other videos or check out our website and book a consultation with us.